Oh boy, here we go again. One more day left tomorrow. Boy, it's been a wild week this week, and tomorrow's non-farm payrolls, we're probably going to get even more great volatility. But don't you worry though. Tonight's charts are pretty darn easy, and by the end of the video tonight, I'm going to give you guys a pretty simple game plan to make some money on Friday, no matter what non-farm payrolls throws our way tomorrow morning. Now, before we jump in and get the party going tonight, a lot we're going to cover in a very important video. Before we get started, though, make sure you subscribe to the channel. That way you don't miss tomorrow night's video. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out. Give me a holler down in the comment section below. Thank you so much for tuning in, supporting the channel. It's been a fantastic week so far. Let's keep the good times going. Finally, Friday coming tomorrow. Where are the best trades setting up for non-farm Friday? Well, I got the charts all loaded up in front of me here tonight. Nasdaq, the triple Qs. I got the Emini and the SPY. As always, I'm going to start off on the 60-minute time frames. I like to use these higher time frames to plan our trades for the following day. And then later on in the video, I'm going to drill down to some tick charts. Tick charts will help us plan the perfect entries for non-farm Friday. So let's start first on the 60-minute big picture, and then we'll drill down and talk entry tactics as we go deeper into the video. Over on the S&P right now, we are bullish on the 60-minute. We're definitely bullish overall, but we keep on banging our head against this major resistance. That 4,600 level is a major level of resistance. Right now, we're trying to buy as low as we can to avoid that resistance, or we're trying to buy some breakout pullbacks going higher. Pretty simple game plan on the S&P and the SPY. We'll break down some entry tactics here in a moment. On the Nasdaq's pretty simple overall. Bullish into a trading range right now. The sellers have tried to take out that low we've been talking about this week so far. It seems the bears now have failed to rotate lower. We're now looking for that rotation going higher here, back to the top of that trading range. But just like the S&P, it seems like we're still kind of banging our heads right now into some levels of resistance. So we have to assume the buyers are trying to buy those dips or buy those breakouts going higher. I got a bunch of great trades I'm tracking for the NASDAQ. We'll cover all the details here in just a few moments. Before we jump into the tick charts, though, and talk about entry tactics for tomorrow, I do want to check our calendar for tomorrow because there's two things on my mind for tomorrow that I want you to be aware of as well. The first one, of course, is the non-farm payroll number at 8:30 Eastern Time. That is arguably the biggest news of the week. It could easily be the biggest news of the month of December because we know the Fed is obsessed with the jobs market right now, and we know they're making decisions about potentially cutting rates early next year. So that is a big variable for us tonight. And because of that big variable, we'll talk about some different scenarios that may pop up on the charts here because we're probably going to get some volatility off that number tomorrow. So we'll cover some volatility scenarios tonight on the chart. The second thing, which is also very important, is tomorrow is a Friday, and I have what I call the Friday mindset. Now, it's important to remember that as we get later in the day on a Friday, the volume dries up, liquidity dries up, and people tend to take bigger risks than they normally would. So my goal, my mindset on a Friday is to get into trades as early as I can, try to remove risk, take a small bit of profit, but I always try to leave a little piece of a trade open into lunch, into the afternoons on Fridays, because Fridays, well, if you have experience with this stuff, you know Fridays, they tend to pick a direction and they run and they run and they run. So early in, remove risk, take some profit, but leave that little piece of the position open because, again, Friday mindset says they love to run. So those are the two components on my radar for tomorrow. The employment number tomorrow, which, again, is a very big variable. Nobody knows how the market will react to it. We'll plan some scenarios tonight on the charts here, and mindset. Early in, remove risk, take some profit, and leave a runner. All right, let's now get back to our charts, though, because the money is made, of course, on these charts. Let's now cover my favorite trades here. We'll start first on the E-mini SPY, and we'll wrap tonight up here on the NASDAQ and the triple Qs here. As I mentioned in the introduction, the 60-minute chart, we're definitely bullish overall, and the buyers have struggled so much to get through this key 4,600 600 level, this major resistance from earlier on in the year. So right now, I'm trying to buy as low as I can or buy some breakouts going higher. Let's now drill down to some tick charts here. Tick charts, I like to use tick charts for the entry tactics. I think they make everything easier when it comes to timing entries. This is a 7,000 tick chart. You can see there in the upper left-hand corner, and that, of course, is the 21 EMA. In case you're tuned in and watching here for the first time, this is a pretty easy chart. As I mentioned earlier in the introduction, the charts are pretty easy here tonight. This market is a bull market right now into a trading range. If you're taking my free video classes right now, we talk a lot about what we call directional ranges like this. And there are really three ways in a bull market to trade a directional range. One of the ways is to buy support levels underneath the trading range. Now, beware of this. There could be three different variations of buying that pullback, and we'll talk about that here as we go deeper into the video. We'll cover those three different variations that we're ready for no matter what the market gives us tomorrow. That's one way we can trade it. The second way we can trade it, of course, is with a breakout, right? A breakout going higher. That has also three different setups or patterns I'm watching to trade that going higher tomorrow. And the third one, which you may not be aware of, is a fake out breakout. Fake out breakouts, especially around non-farm payrolls. We want to make sure, and towards the end of this lesson, we'll talk about that fake out breakout, because you time that properly, and that could be a very, very lucrative way to end the week here this week. So let's talk about those scenarios. Why don't we talk first about the pullback going lower, and then as we go deeper into the video, we'll talk about fake out breakouts and, of course, breakout pullbacks going higher. So you'll see in the chart right now, I have a couple different notes on here: shallow pullbacks and deep pullbacks. So when I think about a bull market right now into a trading range, that range is a magnet, and I'm simply trying to find support levels to buy support going back up into that trading range. I want you to think about these two scenarios. If I buy a shallow pullback, I'm buying relatively high compared to that major resistance. That has its own set of problems, right? However, if I wait for a deeper pullback, I like a deeper pullback, but the problem with a deeper pullback is, right, a deeper pullback is great because it gets away from that resistance, but a deeper pullback is more likely to pull up and retest that low before we take out that move. So momentum is a big problem with a deeper pullback. So a deeper pullback has its benefits, but it also has some trouble as well. So once you know those two types of pullbacks and the kind of inherent challenges that come along with them, let's now talk about how to get around that problem. So in the video course, in my free video classes, we talk a lot about what are called bear traps, right? And that's basically how you want to trade a shallow pullback. I'm going to look for the bears to try once, bears try twice, and when I do this, I want to look for what I call in the free video course a bear trap. Now, what this actually does is it gets the bears short, allows me to use their stops to fuel the move going higher. And because we have that little trap low right there, I'm buying nice and low. So I'm not having to worry about buying into that overhead resistance. So in my trade room, we always say shallow pullback traps, shallow pullback traps. Again, we call these trap patterns in our free video course. It's a higher high in price, bears once, bears twice, nice strong signal off of that. That solves that problem of buying too high into resistance. Now, if we get that deep pullback, okay, the deep pullback is really what we hope we get tomorrow. And with the non-farm payroll number at 8:30 Eastern time, we may see a very, very big move, right? There's potential for a very wild reaction to that. I mentioned earlier, the good part about a deep pullback, we now have a lot of space to work with, but now that momentum is a big challenge. Remember, whenever we see a strong move down like this, we have to anticipate we're going to pull up and try to retest that low. So I got to be very careful buying it as it moves higher. In this case, I like to use one of two patterns. One is called a two-try failure. Bears once, bears twice. Remember, with this much strength going lower, there's a very good chance they're going to pull back and retest that low. So let's trap those bears in and try to use their stops to fuel that move going back up, right back up into that trading range. Nice deep pullback. I like the fact that we're a good distance away from resistance, but because of all the momentum, I want to not try to pick the bottom on this, but wait for those bears to try to retest, let them try twice, and then use those stops to fuel that run going higher. Now, one follow-up on this, one follow-up trade on this is oftentimes the market will snap and run back higher. As it snaps and runs back higher, remember, what's my challenge? I want to buy as low as I can. This is where another one of those bear traps will come in. One of my favorite ways to trade, a really deep pullback. Bears try once, bears try twice. Use their stops again to fuel that move going higher. Anticipate them trying to retest that low. And then as the market races back up to take out those highs, I don't chase it. I find those higher highs in price, right, and I grab that bear trap on the way back up again. Really, really easy way to look at that deep, deep pullback. Now, if you're watching for the first time right now, this might be way, way, way over your head. This might be a whole brand new language, failures, stop runs, bear traps. But don't you worry. I cover all these patterns. I have hundreds of examples of failures and bear traps and ranges all wrapped together in our free video classes. What I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link. Take that free video course, because the strategy you'll learn in that short video series will teach you a simple trick we use to know where the best trades are going to be each day. But more importantly, I'll teach you 4 of my favorite entry patterns to help kickstart you making money on your own. If you're not making consistent money right now, if you're tired of missing the best trades each day, if you're still struggling to qualify for a funded account at Apex or Top Step or whatever funded account you're trying right now, grab that link up there, learn that roadmap. That simple roadmap will show you how to find so many easy winning trades and get you on the right track. So grab the link up top there for the free video course. And also too, if you can't grab that link up there, I'll put all the important links, by the way, in the description of the YouTube video, the free classes links. Also, too, I'm on Twitter a lot during the week. If you're on Twitter, give me a follow. I'll put my Twitter handle down there for you in the description as well. So absolutely grab that free video course, especially if you're watching here for the first time. So I mentioned earlier the shallow pullback trap, right? Shallow pullback trap. The deep pullback to try, right, and then back up. Now, another very common entry pattern. We should be ready for this for tomorrow. And remember, I'm going to go over going higher here in a moment. I have not forgot about that. I'm talking about breakouts. I'll talk about fake-out breakouts as we go deeper. But remember, if we see a real strong shot going lower tomorrow, what's going to happen? They're going to try to pull it back and retest that low. I love these scenarios because what happens oftentimes is as the bears get in and short back down again, they'll be taking their profit down here. So oftentimes I can go in and use another one of those 1, 2, again, we call these failure patterns. This will be a 2-try failure, a variation of that failure pattern. Use those stops to run back up. And as I mentioned earlier, if it does start to squeeze and run back up into that trading range, don't chase after it. Look for that, what was it again? That higher high in price and that trap right below that low. I call these double bottom retests, right? Buy the double bottom retest. And we have to assume that if we do get that strong run down, the bears will try to retest it. Once they do, again, think about it. Anybody who sold that pullback, they're probably taking a bulk of their profit off at the retest of that low. Then if we start seeing rookies come in, because professionals would never sell down here, right? Rookies come in once, rookies come in twice, couple tight stops, small accounts, knock those stops off, run that stop, squeeze those bears, and then look for that bear trap on the way back up to retest the high. The only other variable that sometimes happen, especially with non-farm payrolls here for tomorrow, would be a a V bottom. So let's say, for example, right, we get what happened today, right? We had that big move down yesterday. The market V bottoms off that low. What happened, right? It pops up, grinds. We draw channels, right? And we start buying off the low of that channel. If you watched last night's video, we talked about how if we didn't get that two-legged pullback in a retest, we then start looking for channels, right? And buying the lows of those channels. That's pretty much the same game plan here. If we roll lower and all of a sudden we just pop right back up and start grinding higher, what happens, well, at least for me, is my monkey brain, right? My emotions start firing off saying, get in, right? You're gonna miss it. Whatever you do, don't chase it. Find a trend line off those highs, bring it off of that low, and then look left and try to find some prior swings. And then I always like to grab those entries off the first test, off that channel. You can't see it very well on this higher time frame. We trade a much faster time frame in our trade room. But that V bottom off that low starts grinding. Find those highs, find those lows, right? And we're buying off the low of that channel, right? Pops up, starts grinding higher, drawing off those highs, drawing off those lows, and we're buying right off the low of that channel. So if we really roll lower, again, non-farm payrolls, and we boing right back up again, the hardest part is going to be not chasing after it, right? As it gravitates or grinds back higher, draw off the highs, find that low, and if you get lucky enough, we'll get those bear traps off the low of that channel. And by the way, guys, this could be any of the entry patterns you guys are learning in the free video course. It could be a bear trap, it could be a seller failure pattern, it could be a failure into pullback combination. And again, if you're in the free video series right now, that should make a lot of sense to you coming off the low of that channel. All right, guys. So now, hopefully by now, you can see the good and the bad of a shallow pullback and a deep pullback. Once you learn that aspect of it, I think everything will get a whole lot easier for you going forward. Now, the real fun. Let's get down. Let's kick this party up a couple notches now. So, another scenario, right? The pullback's the easy part. What if we break out? Right? There are 3 different ways I can trade a breakout. There's also one way to trade a fake out breakout. And I'll tell you right now, if we're lucky tomorrow, we'll get that fake out breakout and that deep pullback, and we can time them both. Right? Time them both. We'll talk about that more as we go deeper. So don't you go clicking off the video here tonight. Let's keep this party rolling here. How about some NASDAQ? The NASDAQ looks a bit lonely over here. Let's get the NASDAQ going as well. The NASDAQ is a pretty simple chart overall. The bulls have had a hell of a time cracking through this overhead resistance right now. We're a bull market into a trading range. We have this rotation off the low. And again, earlier this week, the bears kept on trying, right, to send this thing back to that low. And just seems like they keep on kind of holding up right at this, 16,050 level, right, whatever it is right here. So the NASDAQ is in a similar situation to the S&P where we can see overhead resistance is clearly holding pretty well right now. We'd love to buy nice and low, like on the S&P, or if we can break through, we got blue skies overhead, you can see here, to get up around these highs up here for that, what we call a pendulum swing up around the high of that trading range. So we're bullish overall. We're running into a bit of resistance right now. Here's a 4,000 tick chart on that NASDAQ in the course of 21 EMA, like it was on the S&P. The NASDAQ is the same game plan if we go lower, right? Shallow pullback. The problem is we're buying pretty close to resistance. A deep pullback, which we have to be ready for tomorrow with that non-farm number at 8:30 Eastern time. We prepared for that rollover and that retest. So remember there's always that balance between location and momentum. You know what I mean? There's always that trade-off between location and momentum. Sometimes you'll have good location, right? Or sometimes good momentum but bad location. Sometimes good location but bad momentum. All right. We'll talk more about that tomorrow in the trade room. Let's talk about going higher here. All right, going higher now. as we go higher, we need to get some clear proof of this breakout. All right. In my trade room, I always say if we're trading breakouts, we have to see convincing proof, right? A convincing breakout. If we don't see convincing breakout, we're going to fake out breakout and back in. All right. Which again could be very lucrative if we get our cards right here for tomorrow. Let's talk about right now. Let's talk about 3 different breakout patterns that I have on my radar. Now, we know where the market's trying to go, right? We know that 16,208 half level. We know, right? We know these areas up overhead are kind of where this market would love to get to next. We want to be aware of that area up there, right? Kind of the big objective for those buyers. If we break out, 3 patterns I'm watching for. 1 on the way up is always going to be a bear trap. So if the market starts ripping higher here, or if it rolls off that low and blasts going higher, because that could easily happen too, right? We might get that little bear trap off that low, and it may rip and run higher. It doesn't matter. It doesn't matter whether we go up or whether we go down first and go up. If it starts racing above this range, I always will look for this pattern, this bear trap pattern. I want to buy as low as I possibly can. Now, this move will have some juice to it, all right? You'll feel it. It'll be quick, moving fast. Not everybody will have the guts to take this trade. It does take some experience. But if we start seeing this market really start pushing higher, we get that higher high in price. Okay, it's so important we get a higher high in price and that bear trap underneath that low. It'll look like this, right? Strong run up, shallow pullback, higher high in price, bear trap right below that low. That's exactly what it will feel like, right? It'll be ripping going higher. It's that higher high in price and that trap below that low. So that pattern right there, and again, in these patterns like this, it's all about personality. Strong run, shallow pullback, higher high in price. Everybody wants in, but the successful traders, they're going to buy as low as they can with that bear trap. Okay, so buy traps with a strong breakout going higher. The second scenario now is a breakout pullback. One of the coolest things about ranges, at least I think it's cool because I'm kind of a trading geek at this point in my life. But at this point, right, this is a range, and we know that when we break out of a range, markets love to break out and pull back. Okay, break out and pull back. I will tell you right now, you could literally trade just this pattern and make a ton of money each year if you just follow this really, really simple pattern, right? Wait for a range. Again, wait for a convincing breakout, right? Convincing breakout. And when I say convincing, what I mean by that is, and we talk a lot about this in the free video course, is you want to see the market separate away from that moving average, the 21 EMA. Like, see right here? See right there? See how it separates off the moving average? Okay? A lot of times, a trending market will not. A lot of times, trends will grind up like this. Okay? That's a trending market, but it's not strong, right? But if it pops and separates, right? You know what I mean? It separates away from that 21 EMA. Bingo. That's your strong move that you want. So if we start seeing that pop up and separation away from that moving average, okay, now you have the stage is set for that breakout pullback. Now, look left. Think about those prior highs right now. Okay, what was resistance now becomes support. Now wait for the pullback. And if we're lucky, this pullback be very, very strong. The strongest pullbacks are oftentimes the ones you want to buy the most because those are going to fool traders, in this case, the rookie traders, the uneducated traders, the people who don't watch these videos every evening. They're going to come in, they're going to think that pullback is a reversal, but I'm telling you right now, if it pops up and grinds up like that, most, obviously I have no crystal ball tomorrow, but the odds are stacked in our favor for a snap back up to retest the high. All you do now is get underneath the moving average, under the moving average, get those bears like this, right? Get the bears trapped in, let them short, and then use those stops to fuel back up to retest the high, right? Get that strong run up. Again, pop and separate off the moving average, get that nice, again, I would like a sharp pullback time it off the top of that range. That's your breakout pullback. It's a really, really easy trade. And again, I'll bet you could just simply trade that pattern for the rest of your life, go big size on it, and I'll bet you could make some pretty good coin in whatever market you want to apply it to. The third way to do it is a pop and grind channel. All right, a pop and grind channel. And you can almost kind of see like this right now. See, it kind of pops up like this, pops up, kind of grinds like that, trend line off the high, off the low, right? Buy that low. Okay, that's the same basic idea. Now remember, it may go lower and then pop up and grind. Easy. Off the highs, off the lows. Mark up those swings and buy that first test. I'm not going to go over all the entry patterns right now because, it's YouTube and I keep the videos as short as possible. But I go in more detail in the video course, right? So traps, failures, it could be that scenario, okay? That could easily happen. It's a pop and a grind going higher. Or it may pop up and begin grinding. These are tough, okay? Because as it grinds, that little voice in your head, and I joke around by saying my monkey brain will start going, come on, dummy, get in, you're missing it. Once that voice in your head starts talking like that, you probably know you're on the right track. Find that high, find that low, okay? And then again, look left, find some prior swings. I always, again, if you've watched my videos, I love traps. It's so, I think it's the easy way to make money is timing the channel low right off a prior swing low, and then bear trap, get underneath the moving average for a failure pattern. Again, I can't go over all the details right now, but that's another scenario I'm watching here for tomorrow. All right, and so one question might be, what's the difference between a pop and grind and a breakout pullback? A breakout pullback will go up and pull back right away. All right. A pop and grind will go up and keep going, and it won't be as likely that we get that deep breakout pullback. You know what I mean? Right? It'll go too far to get a breakout pullback. In that situation, find that channel, and all we're doing now is trying to get that first test off the low of that channel. Makes sense? All right. It may pull all the way back. If it does, failure back, right? That's probably good too. All right. So just be aware of that kind of variation as we go higher. All right. I'm getting kind of excited now about non-farm payrolls. I love these videos. Last but not least here, the Fake-Out Breakout. If you watch these videos, you know exactly what pattern I'm talking about, the Fake-Out Breakout with the crown reversal. So if we go higher here and I want to sell back down again, what is my problem? Okay, and guys, there's always a problem. It's either location or momentum. All right, if I want to sell up here, it's a beautiful location, right? It's a great spot to be a seller. I'm high, above a range, at resistance. Beautiful place to be a seller. What's the problem though? Momentum. We're all bulls right now. So picking tops in a bull market, you probably don't need me to tell you this. They're tough to do. So I'd rather wait for the buyers to come in. Remember, this will not be that pop and grind away, right? This will not be that clear proof of a breakout. You know what I mean? Remember, we talked earlier, I want to see convincing proof of that breakout. If all we do is break out like this, and we start seeing the buyers come in, try once to keep it going higher, I have no interest whatsoever in buying right there. In my opinion, it's way too early. Now, that's my opinion, all right? Too early for me. Buyers come in, buyers try once more. I want to sell two ways here. I need to leverage, I want to leverage the stops of those buyers. And because we're overall bullish, there could easily be trend lines coming up like this. I need to make sure I'm selling as high as I can. All right. Now look at how this pattern is structured. It's a lower low in price. All right, and a trap above that high. I mentioned last night on counter trend trades, I usually go half size position, quarter size position, and if we're lucky, we'll get that crown reversal, snap lower, you know what I mean? Now we have that range still once again. Moving average comes over, trap those bears in one more time, and whoop, right back up to retest that high. This would be a nice little 1-2 combination tomorrow morning in the trade room or tomorrow morning trading on your own. Okay, again, remember, if it pops and really separates, okay, no. We're not fading that. We're not trading against that. If it pops up and we start seeing buyers once, buyers twice, lower low in price, nice trap above that high, strong signal candle, bingo. That sucker is probably coming back down. And remember, don't chase it going lower. This is not a reversal. This is not a reversal. It's a deep pullback in an overall bull trend, and be ready to hit the button as it pulls back into those buy zones. All right, guys? Now we're talking. Now we have a game plan, because nobody knows what the hell tomorrow's going to bring. Nobody knows what non-farm payrolls will do to the markets. But now we get a good game plan for tomorrow. Now, non-farm payrolls, we know there will be some volatility. We know anything is possible. We're going to get some curveballs tomorrow. I do my best to anticipate the setups here tonight, but tomorrow morning is where the action is. We'll put it all together and trade this stuff together every morning, 8 o'clock Eastern time, in our morning trade room with members. I'll put all the membership links. I'll put all the free class links. I'll put my Twitter feed links in the description below. If you're watching for the first time right now, start first on the free classes. Get your feet wet. Learn the basic strategy. And trust me, you'll be ready to go soon enough. Trading with us sometime soon in the morning trade room. Any questions? Any trouble getting access to our free video series? Please don't be a stranger. I'm always here to help out. You can email, use phone, use Skype, use live chat. If you're having trouble with anything, just give me a holler, and I can help solve your problems there as best I can. Okay, guys? Hope you learned a bunch tonight. Hope you use this knowledge to make a killing tomorrow on Non-Farm Friday, and hopefully I will see you sometime soon trading with us in the morning trade room. In the meantime, be well, be nice to each other. A very happy Hanukkah, by the way, to anyone who celebrates starting off tomorrow. If I don't see you guys tomorrow morning, have a great, fantastic weekend. We'll come back next week and we'll do it again. All right, guys. In the meantime, be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.